Welcome to the latest edition of International Tax News. I'm Doug McHoney, PwC's International Tax Services Global Leader. In this edition, we cover selected tax updates from around the world, including my favorite topic, Pillar 2. If you would like to go in-depth on similar topics, check out the Cross-Border Tax Talks podcast in video on YouTube or in audio wherever you find your podcast. Now turning to our current edition. First, the Luxembourg Accounting Board issued updated guidance on Pillar 2 for companies preparing their accounts under Luxembourg GAAP. The guidance generally applies to financial years preceding the transition year, as well as to financial years beginning from the transition year. The Accounting Board recommends disclosing information known or that can be reasonably estimated at the closing date, as well as qualitative information, including how the Luxembourg company or group is expected to be impacted by the rules, and quantitative information, including the portion of profits that would likely be subject to taxes arising from Pillar 2. Next, the Japanese National Diet on March 31st passed 2025 tax reform bills that include the enactment of additional provisions covering Pillar 2. An undertaxed profit rule and a qualified domestic minimum top-up tax are established and will apply to fiscal years beginning on or after April 1st, 2026. The income inclusion rule was already introduced under the 2023 tax reform in Japan and applies to fiscal years beginning on or after April 1st, 2024. Recent OECD guidance was also incorporated into law, including with respect to the methodology for recapturing deferred tax liabilities, the cross-border allocation of deferred taxes, and clarification as to the allocation of profits and taxes in structures including flow-through entities. Finally, an update on the Cyprus tax reform project was given recently at Cyprus's presidential palace. Some of the main corporate income tax proposals included an increase in the corporate income tax rate from 12.5% to 15% and the introduction of incentives for green transition and digital transformation. The project needs more work before it can be finalized, and the timeline for completion extends to late 2025, with eventual enactment expected on January 1st, 2026. Thank you for reading PwC's International Tax News. I look forward to speaking with you again on the next edition and on the next episode of the Cross-Border Tax Talks podcast.